Hi, everybody. Let me just get myself organized really fast so that I have, oh, I don't see question area here. Um, oh, here we go. All right, I just found the questions. Just so you guys are prepared. Wasn't expecting construction today, but of course it happens when you have a presentation, so my dogs are kind of going bonkers. I've been trying to get them quiet, but you'll hear them barking in the background. All right, so let me set up my presentation, and thank you again for having me. I'm excited. This is my second time on this webinar with you guys, and I am here to answer all of your questions, so please definitely send me your questions along the way. And let me just begin by saying welcome. I am Marina, the trader chick Villatoro, and my main focus is on simplifying day trading. And today what I'm going to do a quick cover more or less is 4 steps to simplifying your day trading and understanding how you could get high probability trades. So what we will be covering is understanding market movements using the best indicators. And also I want to focus on one particular trade with a bonus that towards the end, type of trade setups that I work with. I mainly focus on the most highest probability trades, and I love the breakout trade, which I will be talking to you about. And also, I personally am a scalper. I don't know if many of you know what that term means. It's to go in for very small profits, but you're able to profit much more, not only financially, but also with your confidence level, which is something that I want to talk about for trading, which is not a topic that many people talk about when it comes to day trading. So I will cover that a little bit more as we go on with the presentation. So who am I? I am an expat living in Antigua, Guatemala. This is my family. I am also trilingual. I speak English, Spanish, and Russian. The reason why obviously the Spanish is because I've been living in Central America and an expat in Central America, Costa Rica, Guatemala for over 17 years now. My husband's Guatemalan. I met him when I was backpacking for a year and a half around the world, and kind of ended up in Latin America, which I love it here. But I speak Russian because I'm also a refugee from the Soviet Union. Many, many years ago, me and my family, I guess, kind of ran away from the Soviet Union and ended up in the United States, where I grew up. So that's why I speak Russian fluently. It's actually my native language, but I would say English is more my mother language. So before I became a full-on day trader, I also was a fitness instructor for many, many years, and then a travel writer. So what I want to kind of represent here is that you do not need a financial, economic, math background or education whatsoever when it comes to day trading. And that's kind of my goal, is to make it much more accessible to everybody, because it does not have to be hard. It can really be simplified. It does not have to be complex, and even better, it doesn't have to be super stress worthy, I guess you could say, because it can be, and it's not a gamble. So this is a little bit of a background about who I am, and basically what I want to teach today starting is, when you simplify something, you basically go to the beginning, to the very basics, right? So for instance, if you're going to be building a house, you cannot have an ornate castle until you have a basic foundation holding that castle in place. And that's kind of what day trading is. And one thing that I recognized over my years, and I have studied with so many different academies, mentors, one-on-ones, I mean, you name it. I spent over $20,000 on my education. After losses, and even after my education, I still had massive losses. And mainly what happened is that none of the academies that I studied with, or even the mentors, they ever taught me the absolute basics. So I was kind of thrown into my education without even understanding what an uptrend is, a downtrend is, or that there's a sideways trend, reversal areas. None of these were taught to me, and they're just the basic language of the market. And honestly, right now, I will stake everything I have on it. What I'm going to say right now is if you guys do not understand the basics, if you don't understand what divergence is, reversal patterns, that there is a very strong sideways market trend, consolidation areas, you will not be able to go to the next level in your trading. You will continue to be part of that 95% that is not profiting consistently. And this is something that I learned very hard way. Took me almost 2 years of studying, and because I was never taught those things, basically what I was taught is when, follow my strategy, whoever the academy is, this is my strategy, but that's not the case, right? If you are going to sit down in an art class, you do not want to have the same exact style as the art teacher. You are going to develop your own style, but if you're not taught the basics of that, you can never grow. So that was something that I realized. And in a lot of other places, they were like selling their softwares. And again, it was me depending on them and never learning just what I have to understand, right? So that's one day, about 2 years into my learning, I was live, and I totally cleared an account. I lost almost $4,000 within literally 5 minutes, and I'm on the ground laying down, and my husband's looking over me, and he was like, why are you continuing to torture yourself like this? And I'm like, I don't know, but there is a reason why I want to day trade so bad. And like normally with breakdowns, there's two things that could happen to you. You either quit or you have a breakthrough. And that's kind of what happened to me. I had a breakthrough. It didn't happen overnight, trust me, because you know what happened overnight? I went back the next day and revenge trade and lost another $1,000. So then I completely shut myself off, went into only sim mode. I actually think I just stepped away for almost a week or two completely because I was just feeling too lost and too confused. And that's kind of when the breakthrough started to happen. Oh, I'm so sorry. I do not understand that. Okay, there we go. So basically, during that breakthrough is when I realized that I was looking at a market with over 10 indicators, blinking, and I didn't even understand what I was looking at or reading, like my own interpretation. I was only looking for the trades that my mentors or teachers were teaching me, and I couldn't spot them, or they were also telling me to go for like these really, huge targets, and I couldn't handle the targets. So that's kind of when it hit me. Wait, I have to understand what the market is simply telling me. And that's where this whole revelation came about, and it's the basics. So right now I want to go over that with you guys about the basics. So market movement and the breakdown of a trend. I know that the majority of you are like, well, of course there's 3 trends, but it's amazing the amount of people that don't understand that the sideways trend is literally the place where you can lose the majority of your money. And also, especially for scalpers who are going for the smaller profits, going in like an uptrend or a downtrend, just a quick side note, you can make as much money going down, probably even more as you can going up, simply because the market works identically up and down, and a lot of times it goes down more than it goes up. So you as a day trader should not discount shorting. Shorting is a very beautiful, profitable way of trading. Anyways, so there are 3 trends: the uptrend, sideways trend, downtrend. You also need to look at where in an uptrend or a downtrend you're going to be going, because if you're coming close to the end, you're going to end up losing. So you have to be able to understand how that's read just as well. So what is basically a trend? Just a really, really quick review. It's literally a high trend is when your pivot is higher than the other pivot, right? And you have the higher lows. And the same in the trending down, right? When your one pivot is lower than the other pivot and you have lower highs. So that's basically the trend, right? And understanding what it is. So you have the beginning of a trend, and a trend is a sentence. It's literally a sentence for you in the market, right? Just like we have sentences when we're reading books, just the way we have almost, I don't want to say sentence, but it is kind of like in music, right? When before the pause happens. So that's the same thing with a market, right? You have your beginning of a trend. This is usually the highest probability that you will be able to go the longest, get the highest amount of profits if you're going in with a higher contract load. Then you have the body of the trend. And then you have the end of the trend. And you need to know that where it stops. Where is that period? Or a comma, meaning a breakthrough. It could continue on. And that's just as important to understand and know, because breakouts are really wonderful places to enter just the same. So also for day trading, when I mean day trading, it's intraday. Some people like to hold a couple of hours. I'm never in overnight. And I trade the ES Mini, so you really cannot stay in overnight. You have to be out before the end of the day. My trades usually last 3 to 15 minutes. So I will look at the overall momentum of what's happening. It could be during the day, whatnot, but sometimes you'll have an immediate momentum. An immediate momentum is when the market changes and gives you a whole new trend, even if it is for a very small amount of time, and then ends up continuing to go up again. But you can really benefit from those immediate momentums and get in on a quick trade that is very valid and still very conservative with a high probability. And that's all because you understand what the market is telling you. Another thing what's really important, sometimes a lot of my students, they'll just send me, you see this line? They call this a trend. This is not a trend. A trend is very important to understand that it is a run, a retracement, a run, a retracement, a run, retracement. Some people know it as a correction or, yeah, just headed going back, but mainly it's a run, retracement, run, retracement. That is the essence of a uptrend, downtrend. Sideways trend, it just goes back and forth, back and forth. It's not a trend, not a place that you should be entering. At least for me, I have discovered that is also a very huge place for traders to lose the amount of money that if they win anything, they will pretty much give it all back in sideways trends. So what are sideways trends? Basically, they are consolidations. They are transition areas. I call it the trader's worst enemy because it is where you will give away all your money for several reasons. Before I continue, let me just do a quick question check here. Again, please, everybody, if you have any questions at all, I am here to answer them for you. And, you know, anything that comes up, let me know. All right, so sideways trend, consolidation area, transition area, decision area, however you have heard of it. What is happening here? So here we have a pretty decisive move up, right? So what happens here? All of a sudden, it starts to kind of go back and forth, go back and forth. And you can see that the pivots here are starting to touch one another, and the pivots here are starting to touch, not touch, sorry, to be on the same level. So basically, the market is come to an indecision area. We as individual traders or retail traders, we do not have any way whatsoever to move the market. So this is really important. Why do us traders, smaller traders, lose so much money during these periods? Several reasons. For one, our egos. We truly believe that the market is going to do what we want it to do. And trust me, I used to do it all the time. The market is against me. Why is it doing this to me? It's not doing anything to me. It's doing its own thing. What I have to accept and be humbled by is that I need to understand what it's doing and never predict what it's about to do or try to beat the market. That is an absolute killer, and I can guarantee that over 99% of beginner traders, I would actually even say 100, believe completely that the market is doing something to them. Once they come up with that realization that the market is going to do its thing no matter what, and it has nothing to do with you, and what you have to do is work with it, right there and then, it is going to make your life so much better and profitable. So that's something that's really important. A lot of traders believe that. So what happens here? All right, we're looking at the sideways market. This is how a mentality of I know what the market is going to do next. I'm going to beat the market works. All right, I'm going to get in long because it's been going up the whole time. I'm going to get in long because the market has to go up. It has to go up. No, it doesn't. It doesn't have to do anything. Actually, it could decide to go down. We are not in that position to do so, right? So that is a really important thing for us to understand. Another thing is when we're looking at an up market and then it's doing this kind of movement, people will start saying, well, it's got to correct itself. That means it's going to go down even lower. I'm going in short. Again, it doesn't have to do that either. The market does not have to do anything. As a matter of fact, it could stay like this as long as it wants to. What we as traders have to understand is when it is in this kind of a movement, this sideways movement, this consolidation. Consolidation is a pause. It could be a small pause or it could be a very long pause, right? Which could also turn into a transition. Transition, I'll show you in a second, is just literally changing direction, right? So here we have that same sideways market. We're looking at this overall thing right now, but when you're in the live market, you don't know what it's going to do, right? So for instance, right here, let me show you. This is my platform that I use. So here I am. I'm seeing that the market is pretty much here. This is probably, I've already drawn this out. Good example. So the market is showing me live that it's kind of in a dead end position right now. It's in a pause, right? It's been running and now it decided to take a breather. I'm not going to say, well, it's been going up this whole time, it's about to go high, or it's already been going too much up, it's about to correct. No, that's not for me to say. So this is what I'm seeing. So what I'm doing is I am waiting. I am waiting for the market to tell me what is about to happen. Right? So that's what exactly these particular areas are all about. Let me just open my full screen again. So you have to understand one very important thing. There are 3 positions in day trading. The position when you first get in, the position when you get out, and the position when you completely stay out. And believe it or not, staying out of the market altogether is a really difficult thing for day traders because it involves a lot of patience. So when you're sitting this kind of movement, and sometimes it could go on for a couple of hours, if you're only trading for 2 or 3 hours a day, you could, be like, well, I have to get trades. I know that other traders are taking 100 trades a day. That's totally not true, by the way. That's a myth. So staying out is probably going to be the most important position to do, especially when you're starting to see this, okay? Because when you're starting to see a little pop out or a little movement more down, something like that, you want to get in. So the temptation is really difficult to manage when you are seeing a sideways market. But I guarantee you, when you see this and you learn this market and you understand the difference between an actual huge channel where it is still sideways but it's tradable, or when it's this ugly type of stuff, you will understand the difference. So these are just transition areas that I wanted to show you, consolidation areas, indecision areas. You see here it's kind of stuck, it's not sure what it wants to do, and then change direction. Again, it's kind of stuck, it's not sure what to do, and in this particular case, it continued on down. Okay, so that's something you really need to understand. How do we start to recognize these areas? How do we know they're even happening? So that's where we begin to understand the importance of drawing your areas. So number 1, you have to have a charting platform. If you don't have a charting platform, I would not even start trading at all, because your charting platform is like a doctor when they go in to see a patient. They usually have a chart that they are working from. Somebody's already talked to them and taken their information, and especially if there had been a serious situation with a patient, they all have these charts, right? They have these machines that are telling them their different indicators, their heart rate, their blood pressure. It's the same with day trading. You are looking at the pulse of the market. You cannot day trade if you don't have a pulse to look at, right? So also, it's really important is to understand how that works. So here we go. We have a really significant downtrend, right? And then all of a sudden, it starts to hit a certain area. This area, when it's down, this is called a support area, right? You can see that these pivots are pretty much hitting the same area and over again. I normally start to draw it in when I see 2 or 3 pivots already happening. So that's what happened here. I see these 2 pivots, and then I've already drawn it in, and it's a support area. This is not a secret language of traders. Everybody has to understand support areas. Why are they important? Because it's an area that the market has been respecting. And us as individual traders, small sum traders, we need to respect that area just as well. And when we see this, we need to stay out. We need to let it happen. So this is a support area. Going up, this is a resistance area, a ceiling. Again, We do not know if it's going to continue or if it's going to go down. Not for us to decide. All we know is that we have to simply watch what it does, right? So this is a ceiling. This is a resistance area. And one thing that's really interesting about market is you see this little gap again in the live market. This is probably about an hour's worth for me. When I start to see this, I've drawn this in, and when it hit this same area about an hour or even an hour and a half later, guess what? Oh, actually, it says it right here, 8:30. So this actually gap lasted for 2 hours, 2.5 hours. Happens a lot. So you just have to be prepared for that, right? So when it hit this area again, 2.5 hours later, I was not surprised. I was like, of course it hit that area. It's been an area that the market has respected. Okay, that makes sense. That's why I need to stay back and see what it's going to do, because it's an area that the market has respected, and the market will always hit an area that is respected, either going up or it could hit it from down. It doesn't matter, but it will, and it could be a bounce, it could be a standing around, or it could be a going or changing direction. So we need to understand that. Okay, so I see a couple of questions here. I do not pick a stock. Gang, I am 100% ES mini futures. I only focus on that one instrument. It really simplifies my life a gazillion times. Again, I do not, Michael, I don't work with penny stocks. However, all of this that I am teaching you guys is the market. Okay, this is every single chart for any instrument you will be trading. Penny stocks, crude, ES minis, crypto, Forex, they all say the same exact thing. They all talk the same language. So you need to understand that language, and then you'll be able to apply it to whatever instrument you are working with, right? So how do you decide to join? Okay, sorry. When the market starts, how do you decide to join a trade? You prepare. Gang, I have a lot of very specific green lights that I look for. They are really, really specific. And once I have, it's a very solid strategy, right? So right now I could sit here and tell you exactly what I am looking for, and know if it doesn't do that for me, I cannot get into the trades. And at this point, I've learned to be very conservative and patient. Patience is something that you really have to work on, unfortunately. Okay, Michael. Okay, so I do not time my trades. My charts are 610 tick charts. Ticks are transactions. So again, I watch it as it goes, and then I know when to get in and how not to get in. How many ticks per bar are you using? 610, Andre. Okay, so let me continue here really quickly. This is a tradable channel, I call this. So I have 10 points in between, and this gives me mini trends. So I could see these mini trends. Once it starts to come around the support area, or once it starts to come around the resistance area, I know I need to completely stay out of that. How do you start to recognize when these areas or the support area starts to happen? Consolidation area. These are called reversal patterns, right? So you start with the most basic one, which is the double bottom. And this is my other indicator, which is the MACD. As you can see, there's massive divergence. I am staying out. I love divergence. To me, it screams to tell me that something is about to change. Either it's going to go into sideways, either it's going to change direction. I don't care what it is, but it's telling me not to be in the market any longer. So that is really important. Reversal areas are really easy to start to spot because they are the beginning of a support or a resistance area. So, and also divergence with the MACDs really starts to let you know that there is a lot of power being lost, and I need to figure out what the market is going to do by sitting back and letting it talk to me specifically. You see, these are these areas. I love this. This to me is the #1 indicator. These are 100% free, and this is the language, right? This is your do, re, mi, fa, sol, la, ti of music. This is your scales. If you don't know how to read the music and how to do your scales, how can you possibly learn a Mozart sonata? It's not possible. Head and shoulders. This is one that I really don't look at as much. It kind of is a reconfirmation. Basically, you have the shoulder, you have the head, you have the shoulder. It is a strong reversal area, which many traders use. So if you are going to use them, you really need to understand what they are. A lot of people don't understand them and think they do. So just remember head and shoulders. Literally, your head is bigger than your shoulders, and it's in the middle. And when you start to see those patterns, you start to be like, oh, right, that's why the market has changed, or that's why the market is slowing down. All right, breaking out of areas. So for me, a breakout is the same as changing an entirely new market shift, right? So here we've been going up. We have a super strong resistance area. The market is not breaking through. And then finally it breaks through. So this is kind of what you could look at it as. Imagine you want to go running. So when you first go running, get your sneakers out, you get sneakers on, you get out the door, you've got all this energy, right? You are jamming, you are in control, you are running, you have energy. That is the beginning of a trend for me. I'm going to show you that a little bit later. But what happens during your run? You get tired. You want to get a drink of water. Then you start to think, okay, should I go home? Am I tired? Can I do it? And then you're like, wait, I got a second win. I'm going for it. So that gives you that second energy burst, right? The second one isn't as strong as the first. However, it is strong enough to give you a good entry and to get at least your first profit. That's why I love breakouts. Okay, now I'm going to put it all together for everybody. First, what I'm going to do is kind of break the stigma of day trading. I literally work with one chart on my laptop. I could do it anywhere where there is internet. This is me. We went for 6 weeks with my family to Spain. I was able to do it, to trade wherever. And the best part about Europe, markets open there around 2:30 p.m., 3:30. I can't remember now. It was awesome. This is it. This is my chart. You are looking at my chart after my breakdown. Remember I mentioned how I lost all that money? I had 10 indicators going on. I'm down to 2. My beautiful MACDs that I love, and my EMA line. I actually have 3 EMA lines because they're 3 different time periods on the same exact one. My main EMA line, my red one, it's a 52 period EMA line. And you see these little balls, these are tick bars. I work with a 610 tick chart. So each bar shows me 610 transactions, makes it much more real time, right? 5-minute charts, you don't really know the amount of transactions and movements that are happening in 5 minutes. With these bars, you understand if it's slowing down, if it's a lot less volatility and volume. So this is it for me, right? So I mentioned before about why scalping has been my kind of savior, I guess you could say, because what happens with day trading is that we definitely, it's all about making the money, but let's be real. How many of us actually lose money? And let's pretend now that not only are we losing money, but what happens to us when we are losing money and when we are taking invalid trades? We're chasing trades, doing revenge trading. What does that mean? It's our emotional capital, right? Think about it. Every time you put in for a really big profit, right? Because it looks good on paper, but how much risk do you have to put in for a bigger reward? A lot. That makes your heart palpitate even more, right? So now your emotional capital is stressing, right? It's going on ultra high. And then you get stopped out because a lot of times when you go for the super high profit, you're going to get stopped out way more than if you go for a smaller profit. Now imagine this. You're going in for a small profit and it hits it and hits it again. Hits it again. It doesn't matter that it's not as much money, right? It might be only $50, $100, but you know what's happening to your emotional capital? You're gaining the confidence. You're believing that you can do this. You are taking the right decisions. You are making valid trades. This is it, people. I'm not lying. This is it. Emotional capital. If you do not have it, if you have one big trade that you've taken and then you've lost all your money on the other really big ones, that your emotional capital is depleted, you don't trust yourself. What's going on now? Oh my God, I can't believe I made that stupid mistake. I'm so dumb. How could I have done that? I cannot believe this. And then guess what? The market closes. Do you think your emotional capital stays with the market? No. Now you're done. You've got to face your family. You've got to hang out with your friends. You've got to play with your dog, but you're still cursing yourself for what you've done. Your emotional capital is down. However, if you made $50 that day, you've taken all the right trades, guess what? You're smiling. You believe in yourself. You're happier. The more you have that, the more you can start getting more trades, the more you can start getting more money. And that's what scalping to me had become. I decided after being constantly told about my 3 to 4 and 6 points, blah, 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 I started to realize if I only go for 1 point and I'm hitting that profit, because usually it's much easier to go for a smaller profit, I'm feeling better about myself. I'm happier, right? My trades are now between 3 to 15 minutes. I'm hitting those targets quicker. I don't have that stress. And when I'm done for the day, and if I get 50 bucks, 150 bucks, I'm happy. I'm a better person to be around because I am more confident in myself. So that's why, to me, that changed my entire world. Now I'm going to show you a quick breakout trade setup. I first want to answer some more questions really quickly. Okay. Okay, thanks, gang. Please recommend time frame. So again, Young, I am 100% 610 tick chart. I do not have a time frame. To me, time frames don't work very well. My moving average is, my main one is, Marcena is 52 period, and then I have two others. One is, I think, I don't have it in front of me, 135, and the other one is 20. So I'm able to kind of put 3 time frames of ticks. Again, it's all about tick charts on the same thing. Okay, Michael, you call them rhythms of market. Okay, good to know. Thank you. What level are the 3 lines of the chart? Elliot, they are 52 period, 20 period, and 135 period. Yeah, emotions will get you. That is really the number one thing people need to start to really focus on, is your emotions. And if you start to focus on smaller profits and trades that will give you the most probability, and that's usually understanding what the market is doing, you will be a happier person and everyone around you as well. So what is a breakout trade? Here we have a seriously strong resistance area, and it finally broke out. And look at my beautiful MACDs. So this dash line is the 0 line. Look at that huge spacing. This is where I take my trade from. Why? Because think of yourself as an archer. An archer just doesn't walk around a field shooting arrows. They have a very specific place they shoot from and a very specific target. That's what I do. I also use these 3 as areas for me to take trades from, especially in the beginning when that's massive pops. Okay, when you have these massive pops, a lot of confirmation, a lot of area between the 0 line, no divergence. Look, there's absolutely no divergence here. Boom, I take it off from my line. This is a quick bonus setup, the initial reaction trade setup. What is this? Like I mentioned before, breakouts are awesome, but it's your second wind. Now, the best one is actually when you are starting an entirely new trend. That is when you normally have the strongest amount and the most amount of power in that direction. So you want to get in right away to get in on that particular trade. So this is where I would actually go in with a higher contract load. My first profit is always 1 point, but if I have 10 contracts, and my risk is always 1 point. 1 contract I put in here, I get my profit, I immediately move my risk to 0 risk at break even. So how do I know that this is a good position, right? So here is my red line where if once it crosses and I have all this massive strength, look at the strength in the MACDs. So I have these brown lines to help me really see where the strength is. It's kind of just a little visual for myself, because when you're in the live market, everything is crazy stressful, right? You do not want to be guessing at anything. You want to have it all written out for you. So I have these brown lines right here, and there is barely a retracement to that 0 line, and this is my beautiful entry, and boom, same here. Look at that, massive strength, crossing over everything, barely a retracement, massive area right there. That's an initial reaction trade. And these happen all the time. You just have to know when they are happening. After this massive transition area, all of a sudden it breaks through everything here, barely retraces, I'm in. Again, the same thing here. These are initial reaction trades, and they are fantastic. And just if you understand how to read it, look at that. This is a beautiful reversal pattern right here. Double top, massive divergence. I'm waiting for something to happen, and it does. It goes through hard, barely retraces to the MACDs. Look at that huge line. Boom, I'm in. So this is basically my trades that I work with. I actually have 10 different trade setups because the market will never do the same thing over and over again. So you need to be prepared for different market conditions so that when you are trading, you can be prepared and really monetize those different movements, right? And that really boils down to the most important thing is, do you have a trading strategy? Do you have a plan? Because the majority of the times I've seen is that people don't. They cannot sit here and tell me, because when you're about to do something, if you're about to fly a plane, you know exactly which buttons you need to turn that on. Yet when I talk to many day traders and I say to them, all right, what are your green lights for trades? They have no idea. They don't even know where to go or start. Yet they're in the live market donating that money to the market. Why? Why are people doing that? It's so important to have a strategy. Please, it's for your own sake. It's for you to make your own money. And I promise, when you have a strategy and a plan, you will be consistent and profitable. But you also have to have a strategy that you trust. And that happens through back testing and practice. Okay, so what I do is I help day traders learn with confidence and ease. I have a beginner's course when I just focus on, and this is for all markets, not the ES Mini. However, I also teach for ES Mini futures. That comes with a trade setups, with real actual entries, exits, risk management. But I have this beginner boot camp for trading, which teaches you how to read the market and the trading charts under any conditions, so you know exactly what it's telling you, and you could talk to that market and you could listen to it. So my boot camp is normally $197, but for today, for the Traders Talk Live participants, I'm giving 50% off. $98. And on top of that, you get me for one entire month of one-on-one feedback. So let's go here right now, thetraderchip.com/bootcamp. And you can read all that is offered in this particular bootcamp. It's 9 modules of courses, of lessons. These are the different lessons, everything you need to know. Setting up your charts, because you'll be surprised. I can guarantee you the majority of people probably listening are still a little bit confused how to work with a chart. So I help that, because you have to understand how to use your charts, and you have to understand that you need to draw on your charts because they are your canvas. Trending markets. I'm amazed the amount of people fully don't understand the sideways market, so I want to help you understand that so you could really learn how to work with it. Market momentums, the market shift, the reversal pattern, areas, support areas, resistance areas, divergences, and then the breakouts. This is over 10 hours of training, lifetime curriculum access, and you get me. You get my support one-on-one, and normally that's like $350 worth right there of value. You get me for the 1 month that we work together for $98. Remember, go to thetraderchick.com/bootcamp. Okay, and this is some of my students that I have worked with. You could read more about what they've written. They've sent to me. Also, I have a Facebook group that we are interactive, and you could talk with other people in that group as well, all part of what you're getting here. So these are some of the testimonials that I have gotten from students, and again, it really boils down to my support, and I am completely there with you 100%. And this is not only for beginner. I have many seasoned traders that come to me and they never fully understood just how to read the market. And then I also teach, they go on to my advanced course, which again, also for you guys, it will be 50% off. And that course, I have 5 months of one-on-one, and it has the 10 trade setups and all the green lights and everything. So if you're interested in that, please contact me. You can go to thetraderchick.com and we can talk it out right there. Also, I can WhatsApp. I am always available for my students. So it's 50% off, $98, one-on-one with me. Let me go and answer some more questions. Okay, Dano, for futures, you can start with $500. You do not need $25,000. That is only for stocks and equities. Futures, that's the beauty of it. And now they came out with the micro minis, which you just need $250 to start. You do not need more than that. And that is a really great place to start, period. How do you decide on the stocks? Again, Raj, I do not do stocks. But if you do stocks, please do not join stock alert groups. The only people working from that is people who own those alert groups, because they usually tell you about it after they've already profited. So please do your homework on the stocks. It's really important. Okay, Raj, my indicators are EMA lines and the MACDs. These are 100% universal, free on any charting platform. free ones, pay ones, it does not matter. They all offer those. They're the most universal common. My gang, my MACD settings are the most basic ones that are just the universal ones when you first open up. I use NinjaTrader. NinjaTrader is my particular platform that you can see right here. So it's just basic indicators that come with the platform, right? I know that a lot of people sell you their software and their indicators. Please don't buy them, please, because they always are changing them, always updating them, and then charging you more. These are free indicators. You do not need a lot of indicators. What you need is a place to stand, to throw your arrow. The MACDs are amazing to show you when it's about to change through the divergence and the strength. And I go over all of that in my course with you guys. And again, you send me your charts all the time. We go over it because day trading, it is a performance activity. Okay, what does that mean? If I'm going to learn how to play basketball, do you really think I'm going to learn by watching videos and talking? No, I'm going to get out on the court and I'm going to dribble. So what I have with my course is assignments. You go in for every module at what we just learned piece by piece. You do the chart, you go in, you do the assignment, and then you send me your chart with that assignment, and then we go over it together. I send you a personalized video. You send me questions. I talk on WhatsApp, phone, whatever. I'm here to help you. That is my goal because I knew I did not have that support when I started trading, and I really, really want to have that for you guys as well. Okay. I don't know what that means. I'm sorry, Elliot. So my platform, Marcena, is the NinjaTrader. And actually, whatever platform you use, they all use tick charts. So it's not only NinjaTrader. You could use that. You could find it on any. I also use Thinkorswim. So a lot of my students for the Trader Chick Bootcamp, they have different markets that they're focusing on. They work with stocks, they work with crypto, forex, and so they have different charting platforms. And again, all of them have this ticks, MACDs, EMA lines. They're all used with every single one of the charting platforms. And because the bootcamp focuses on simply the language of the market, they apply to that, and many of them come out having many different aha moments. Okay, everybody, please let me know if you have any more questions. And thanks so much for all the action and activity here. I really enjoyed working with you guys again. And thank you so much for having me here. And if you have any questions or anything, again, you can find me always on thetraderchick.com, or I'm also on the Instagram, Facebook. You can email me. And remember, the boot camp is 50% off, $197 usually, $98. You can't go wrong. Just my own accountability with you and the support I give outweighs everything. So it's special for you guys, 50% off. I'm hoping to work with a lot of you. And if you have any questions, my time is up. So please let me know. Thank you again, and have a great day. And thanks for having me.